Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Indian equity markets were set for a cautious start. Fitch has downgraded US credit rating, just spooked Asian pairs. Let's talk about Nifty. It's indicating a negative start coming in for Indian equities. Back on the Wall Street, S&P 500 and Nasdaq ended lower on the first day of August. US market ended subdued ahead of the US jobs data and major companies earning report this week around. Let's talk about FIIs. They've been sellers for fourth consecutive session, sold equities to around 701 odd crore. Let's talk about DIIs. They've bought shares for second consecutive session, 1,035 odd crore worth on August 1st. Bharti Airtel, Dabur, Torrent Pharma and HUL. Infosys are among some of the stocks that have seen highest delivery and the stocks that are under F&O ban. NSE has added Hindustan Copper to its F&O ban list while retaining Piramal Enterprises and Indiabulls Housing Finance. The earnings that we'd like to watch out for, Titan would be reporting in the numbers, along with Ambuja Cements, HPCL, Interglobe Aviation, Mankind Pharma, Godrej Properties, Aditya Birla Capital, VIP. All of these companies who will be in focus ahead of quarterly earnings. Let's talk about Titan earnings. What is expected out of the jewelry and the accessories major out there? It's expected to report in a consolidated net profit to an extent of 923 odd crore in this quarter, which means a 22% year-on-year rise. As compared to what you've seen in the corresponding quarter. Revenue is estimated to come at 10,723 crore, which implies a growth of 20% and 11% sequentially. Let's talk about operating profit. What is expected? 12.77%. A 34 basis points declines is expected as compared to the corresponding quarter overall. But let us get going and discuss some stocks and strategies with Rajesh Palvia, Senior Vice President, Head Technicals and Derivatives at Axis Securities. Good morning, Rajesh. I'm going to start off by asking you about your assessment for the markets right now. Expect some consolidation to kick in further for equities. What's the strategy that you will suggest to our viewers, both for Nifty as well as Bank Nifty?
So some selling pressure is there at a higher level for index, but still if we analyze the overall market breadth, it's in positive territory and a lot of action is happening in mid cap and as well as in the small cap space. So that clearly indicates that, sentiment is on the bullish side, but yes, for index trader, some consolidation we can see for some couple of trading session. Possibly Nifty can remain in range of 19,550 to 19,850. And once we get the breakout or breakdown of this range, then possibly Nifty will show further more, momentum towards the direction. But looking at the overall setup, yes, Nifty is having major put concentration base at around 19,600, 19,650 area. So which is likely to act as an immediate support area for Nifty for any kind of minor corrective action if we see in the today's session or in coming trading session. So 19,600 is the key support area where again, if Nifty comes, one should again start buying for index and keep your stop loss at around 19,500, which is very important level for near-term trend. So buy on dip should be your strategy. Buy in the dips towards 19,600. If we analyze the Bank Nifty setup, some long unwinding was there in the previous session, and looking at the setup, some supply pressure is still there for based on the call concentration, which is existed around 46,000 level, 45,800 strikes. So that area is likely to act as a supply zone for the Bank Nifty in the near-term basis. Until Bank Nifty not crosses above 45,800 level on a closing basis, it may remain under pressure for some more time. And possibly on the downside, 45,200, 300 are likely to act as a good support area. So broader range, if we analyze based on the data set of 45,000 to 45,800 could be the possible consolidation range we can see in the Bank Nifty. But overall trend for Bank Nifty is also on the bullish side. So buy on dip should be your strategy. Wait for some corrective move towards 45,300 to initiate again buy with stop loss of 45,000.
All right, Rajesh, I was just looking at the data, a little bit on the broader terms and probably an aerial perspective there. FITD performance versus 1 month performance, because it's been a splendid run by the bulls thus far before the consolidation kicks in. Nifty was almost up by 4% and 3% odd in the last 1 month. Bank Nifty also saw some amount of traction building in to an extent of 12.5% FYTD basis versus 1.9% on 1 month basis. Up on your screen is also the data point where the small cap index and the way it's outperformed on FYTD basis and of course overall on 1 month basis. That's a splendid chart that we're seeing for Nifty, Bank Nifty and the small cap and the mid cap performance. Look at mid cap to FYTD basis 25%. But the main traction again, like the street already knows in, a lot of outperformance is coming from the small cap index, not just on FYTD basis, that is the financial year to date basis, but also on 1 month basis, a 9% kind of an uptick. Rajesh, coming back, I'm going to check on the sectoral indices too in a bit. But what do you make out of the small cap index right now? Do you further see them? Do you further see traction?
So a lot of value is still there in the most of the small cap, mid cap space. Yes, some consolidation we can see in the large cap space, but the kind of traction, the kind of delivery volume which we are seeing in the small cap, mid cap, which clearly indicates that yes, some more traction we can see in the small cap space, and possibly another round of rally can continue in the mid cap, small cap space also. So yes,
right, Rajesh, we are going to get back to you and check with you about what do you overall feel of the rally that is going to come in for the next leg of small cap. But let's address the market opening first. Like we expected, some amount of caution has finally crept into the market. Remember the strategy that has been suggested, 19,650 mark. Well above, beg your pardon, well below that 19,700 mark, with losses spanning in the range of around 0.5% out there. Let's talk about Bank Nifty index to see the weakness within that space. To a similar extent, 0.5% of losses coming in even for the Bank Nifty, small cap index and the mid cap index. Let's see if they are acting any difference. Well, mid cap index down by 0.5%, small cap index also probably imitating the same amount. It's a bit of outperformance coming in for the small cap index. It's 1/10% of losses. Nevertheless, you are seeing a cautious start coming in even for the small cap index. IT index down and out 0.5% out there. Let's talk about the other sectoral indices that we have overall on the chart. FMCG is down, and even if you talk about the other indices, something like a Pharma, the entire defensive space right now is taking it to the chin right now. Let's talk about something like a auto sales. If numbers have come in and they're not as pretty as we anticipated, 0.5% of losses coming in for the entire auto basket. And if you talk about the other sectoral indices, consumption story remains weak. Let's talk about real estate. Let's talk about PSU Bank and the private banking space, just to see how the momentum has been stacking up. Realty index down and out with losses to an extent of 0.5%. And if you talk about the other sectoral indices like PSU Bank, well, hard knock there too. 0.75% of losses coming in for that one, and private bank acting no different. 0.5% of losses coming in for that one. But the losses are sharper for PSU Bank index. If you talk about the top gainers and the top losers that we have overall on the list, just to see how those are stacking up for you. Well, gainers, we have Coal India, ONGC and UPL. And in other gainers that we have something in the like of DRL, Britannia and BPCL, which is going to be, HPCL is going to be reporting in the numbers. And do remember the fact that it was a good show coming in for BPCL. Let's talk about the top losers that we have overall on the list. Tata Steel, Hindalco, Hero MotoCorp, along with L&T and DV's Lab, JSW Steel, essentially one of the auto name combined with the metal names. They've taken a hard beating this time around. But going back to where we were in terms of the performance that we have seen for sectoral indices, Bank Nifty overall, if you look at the 1 month performance, it's a good performance coming in for sectoral indices. Auto overall has done well, a 28% gains FYTD basis, if you look at the chart out there, and 3.66%. FMCG too. This is just a very long aerial performance that we're looking at just to see the flavor of the markets. And of course, no surprise for guessing there, it's the Bank Nifty index which is done extremely well, But from a 1 month perspective, you've seen auto doing extremely well. You're seeing media doing extremely well. These are the, right up on the screen. And even IT for that matter. There is some amount of traction which has already been seen in the IT basket too. And if you look at the other sectoral indices that we have, a little bit of aerial view, metal, pharma, PSU, you will see metal index doing well on FITD basis. Along with that of energy also, and pharma, 25% uptick coming on this one. But Rajesh, I'm going to come back to you and check with you. What do you make out of the metal counter, the metal space? In today's session, a bit of profit booking has crept in. But if you look at the 1 month perspective and FITD, these stocks have done amazing. How are you looking at that space?
Yeah, we have seen a good traction in last couple of trading session for most of the metal stock. Yes, some profit taking is happening as global markets are volatile in nature. So some rub-off effect is taking place in the metal space. But if we analyze the overall short-term setup, if we see any kind of corrective action towards 1 to 2% from the current market price is again, attractive level to re-enter in the metal space, because most of the metal space, metal stocks have given a breakout on their daily as well as on the weekly time frame. So yes, this corrective move is opportunity again to re-enter in the metal space. So we like JSW Steel. If you get any chance to buy again this stock towards 790, 785 is again a right level to enter, and keep your stop loss at around 770. Even if we analyze the Tata Steel also, stock is taking some selling pressure, but still stock is holding its breakout level. So if you get any chance to buy again Tata Steel towards 118, 117 is a good level to re-enter again. Keep a stop loss of 114 to buy again in the Tata Steel. So most of the metal space is looking attractive, and buy on dip should be your strategy, as we see that, again, traction will be there on the buying side going forward.
All right, Rajesh, thank you for that perspective, and thank you so much for joining us this morning. All right, let's address the auto sales numbers. Ashok Leland, there's a good performance which has come in. Strong sales growth in July, led by high growth in the MHCV segment overall, which is up by 11%. Domestic vehicle segment too has seen a 12% uptick out there. And if you talk about the performance, which is a little bit of profit booking coming in for that one, losses to an extent of 0.2% out there. Let's talk about Hero MotoCorp. A very weak sales in July. Total sales is down by 12%, and the domestic sales has also taken a hit to an extent of 13%. Now, the company says that the numbers are weak due to the weather conditions in July, which is unprecedented rains and floods in certain parts of the country, caused crop damage in several states. This resulted in a sharp decline in the customer footfall at the dealership level. So that's one of the reasons that the company has cited. TVS Motor, well, it's a mixed bag coming in on that one. Overall, a single-digit growth in volumes in July, strong domestic volume growth, but exports overall continue to be weak. Talk about the two-wheeler volume, which is up by 4%, and the domestic two-wheeler volumes, however, have been strong, up by 17%. A bit of positive momentum building up for TVS Motor per se. Let's talk about Eicher Motors also, where we are expecting, where the Royal Enfield, rather the strong sales in July, it's marginally below estimates. Total sales have been up by 32%. The sales, however, have missed some brokerage estimates. What we are also keeping on our list this morning, Ambuja Cement. It's an Adani-owned Ambuja Cement, which is going to be, at least the Newswire reports suggest that they're going to be acquiring majority stake in Sanghi Industry, beg your pardon. And the deal is going to be likely to be announced today. And this is going to be considering Sanghi's enterprises at 60 billion rupees. Now, Adani was among those leading the race to acquire Sanghi, which was being appraised at that enterprise value. Also, do bear in mind the fact that Ambuja will be reporting in the numbers today, and ACC surprised the street. As compared to the other larger counterparts, it managed to show a decent show in the otherwise lackluster quarter. What we also have is Chola Financial Holdings. There is a downgrade coming by CLSA, and what CLSA says that there's a strong growth, but NIMs are expected to be a compress. There's a board approval which is going to be coming in for 4,000 crore QIP. Strong medium-term growth outlook is driven by the new business, but NIMs are contracting like other players. That's one of the reasons why they've gone ahead and given that downgrade also because of the valuations, which are way higher as compared to not just the average valuation, but also the cyclical peak valuation. Stock is at 26 times PE as compared to the average PE of 18 times and a cyclical peak PE of 22 times. So you can always see the amount of premium that it's demanding right now. And do keep an eye out on Ambuja Cements. That's the one which is essentially going to be playing out in the entire session today. Along with the results, look for any announcements, if at all, given what the various reports are suggesting. DLF, where the promoter has sold in 0.59% stake in the counter. A bit of negative momentum given how the OFS are stacking up and how promoters are incrementally selling in their stake. So that's a bit of disappointment and also one of a very typical characteristics that we see in the bull markets, where the retail investors typically are more gung-ho on the markets as compared to the QIBs or promoters also for that matter. But let's navigate our conversation more towards fundamental side now. Ajay Vora, Head Equities, Nuvama Asset Management, joins us to take the discussion forward. Good morning there, Ajay. Your assessment on the markets right now, stocks that have been doing well in terms of the entire mid-cap space, something that fascinates you and can be a pocket of value at this point of time for the investors out there.
Hi, good morning. So broadly, I think that market should ideally consolidate in this range, considering the, very sharp rally which we have seen over last 4 months. And in terms of both valuation and the inflows, what we have seen. So if you look at valuation, we are now trading at closer to 20 times FY25, which broadly in the near term looks like, a pretty much fair multiple. So maybe, a couple of percentage points here and there. But broadly, in terms of positioning also, if you see, we have seen almost $18-19 billion of inflow from the FI side over a period of almost 4 months. So there is a lot of bunching up which has happened considering the outflow which we have seen from them over last 2 years. So both the factors put together, the FI inflow has also slowed down, considering the global setup now, is moving a little bit more towards, risk averse. Considering that people are looking at some sort of slowdown in the second half in US with a lag effect because of the sharp rate hikes. So all in all, I think that we should ideally consolidate in this range of somewhere around 19,000 and 20,000. And then once we get into the festive season and the numbers again start looking up from the consumption side, we can start the next leg. But till then, I think we are broadly in this range of 19 to 20,000.
Your view overall on the mid-cap space, AC sales have not done well, but something on the other hand, like gold jewelry companies have done extremely well. Thanga has done really well, Thanga Mile Jewelers. In the last 1 month, there is a 70% uptick seen on that stock as compared to minuscule gains coming in by the other, counterparts. But today, even Titan will be reporting in their numbers. How are you looking at that space and what's your expectation out of the giant Titan?
So mid-cap has always been very much stock specific, and therefore, it will be very difficult to take a generic call on where the mid-cap as a basket is, likely to move forward. There has been n number of companies during this result season and, last couple of quarters as well, which has reported fantastic numbers. And the theme, I think, which is going on right now is broadly, the companies who are extremely well positioned on the export side, as well as companies who are having a very differentiated franchise on the consumption side. So I agree that, on the very basic consumer durable categories, something like Voltas have not done well. But if you look at, something like a Capex story, which is a Polycab, where the cables and wires have done exceedingly well. So it is very much a stock specific kind of a theme right now, which is going on. I strongly feel that, from here on as well, there are n number of stories on the mid-cap side, be it the whole export opportunity or the domestic consumption. I think these two themes are likely to do exceedingly well over next 2 years or so.
Any specific theme that you're looking at from the AMC level? Sure, you've given a broad flavor of those themes, but any specific themes that you think can be attractive to look at and is not caught up with the momentum thus far and probably could drive the rally in the second bit, if at all there is one, for the mid-cap index?
Yeah, so actually, there are three themes where we are extremely positive about. One is the whole premiumization trend which is going on in this country in the consumption segment. Whether be it on the apparel side, ethnic wear, the shoes category, the travel as a category. So all these things put together across these, the sectors, we are looking at a very fairly sharp premiumization taking place because now people are willing to spend more and more to upgrade their lifestyle. So that is one bucket where we are very positive. Second, as I just mentioned about the whole global opportunity, so there are n number of smaller sectors which are now getting a lot of traction on the export side, either because of de-risking of the supply chain or for whatever reasons. There are quite a few companies who are getting a lot of orders and in traction on the global side. So they are also likely to do pretty well from year on. And the last theme is the whole, the infrastructure transformation which is going on in this country, and therefore, the whole space of cap goods, engineering, and equipment, construction equipment manufacturers. We all have seen that over last 10 years, nothing great has happened with all these names. But we are seeing a lot of traction in these businesses because of the heavy order inflow, both from the government side as well as from the private side. So, these are broad three themes where we are looking for opportunities, and we feel that, the compounding can be far higher over next 2 to 3 years.
So capital goods versus consumer themes, which are the one where you see more traction? In consumer, you've probably hinted at Manyavar Bata and Ease My Trip, if I'm not wrong, but between the two, what do you like?
No, so honestly, in India, the consumer stocks have been always very expensive considering the growth opportunity. But my sense is that, the capex visibility is also very strong. So I would say that, the whole capex related stories are looking far more attractive than the consumption right now.
All right, let's talk about what do you make out of OMCs like, BPCL has reported in numbers, IOC has reported in numbers, HPCL will be a giant which will be reporting in numbers today. What's your expectation from within the space? How are the trends stacking up? How are the valuations playing out? And what do you make out of the capital ratio right now for these companies?
So if you look at the results which are announced so far from BPCL and IOC, clearly there has been very strong upgrade in both these companies. And, to the extent that whatever Street was expecting them to deliver on an annual basis, in a way, they have delivered just in a matter of quarter. So the upgrade has been pretty significant, but the clear reason has been that, there has been a lot of over recovery from all these companies. So crude prices were favorable, and they have not changed the pump prices to that extent, and therefore the over recovery has helped them deliver fantastic numbers. Market is taking a view that this will get adjusted as we move forward over next 3 quarters, and we have state elections as well, and therefore market has taken a view that this can't be extrapolated, and to that extent markets have not given a thumbs up to these numbers. But I think the broad story is also this whole green hydrogen story for this whole segment. Which I feel that if government is really trying to focus and get these players integrated into that whole green energy segment, then honestly it can be a really big story, and we have seen how things change in public sector companies, provided if there is a little bit of more focus, like what happened with defense sector or railway sector. If the focus is there on OMCs where they are asked to migrate into the green hydrogen segment, then my sense is that the earnings volatility will move away, and also valuation can re-rate. So we need to see whether that really that theme can actually play out for the OMCs. If not, then still I think that the downside is pretty limited because most of the stocks are trading at closer to 1.2 times price to book, or maybe 1 time price to book. Which clearly has been, the bottom for the whole sector. So I think the downside is limited. We need to see the triggers for the upside.
In that case, BPCL has already announced in the capital raising plans. Do you think HPCL and IOCL, they've not intended to raise the equity, but may follow suit if the plan is to secure the government grant and to be fair to minority shareholders?
Yeah, so it is possible because the debt levels are high compared to the earnings volatility. So there can be a fundraising. We can expect a fundraising over there. But as I said, that we also need to monitor where the capex is going into. So if it is into the newer areas like the green hydrogen or something, then markets may take it very positively.
All right, the last question that I have is for the entire pharma basket. A little bit of, you've seen some amount of traction building in, especially after the Cipla's number. The guidance has been revised, and there is a bit of sense of optimism around that space. And of course, it's been under-owned by the entire FII community. If you talk about the valuations also, seems to be a little favorably priced. What's your perspective on that one?
No, so actually, if you look at the whole pharma space as well, it has rallied in a fantastic way over last, I would say, 4 to 5 months. And clearly, 4 5 months back, the whole space was available at a very reasonable valuations. Considering the growth, at least in the domestic market, the most of the stocks were pretty much undervalued. So we have seen a very fairly sharp rally in this space as well. And to some extent, the valuations have meaning reverted back to the mean. Clearly, the results have been pretty good for most of the pharma companies, and the commentary also has been very encouraging. It seems that the whole pricing erosion, which was going on in US for almost, I would say, 7 8 years, looks like it is likely to bottom out over here. And therefore, market has taken a view that if that bottoms out and if the India business also continues to grow at a fairly 12 15%, then the valuations were pretty cheap. So even from here on, I think the growth visibility is pretty strong for few players, and therefore, we continue to maintain a positive view on the overall pharma space.
Right, that's the word coming in. Thank you so much, Ajay, for joining us and taking the time this morning. It was indeed a pleasure chatting with you.
Thanks a lot.
Right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.